Gold IRA tax rules. Gold IRA pros and cons. Navigating the labyrinth of Gold IRA tax rules can seem daunting, but it's easier than you think. As you ponder about your retirement plans, understanding these rules becomes crucial for you as an investor. In this video, we'll demystify the complexities of Gold IRA tax rules. To read the full article right now, see the link in the video description. Also, to find out whether your savings are keeping up with the higher cost of living, see the link in the video description to access the free Inflation Retirement Calculator to ensure you are on track. The role of approved custodians, restrictions on physical asset holdings, specific types of rollovers, and tax implications of gold outside an IRA are important considerations within the scope of Gold IRA tax rules. By the time we've finished, you'll not only grasp the tax rules for traditional and Roth Gold IRAs, but also be equipped to make savvy decisions for your financial future. So, let's unravel the intricacies of Gold IRA taxation together. What is a Gold IRA? In your journey to secure your retirement, a Gold IRA is an investment tool you should consider. Unlike traditional IRAs, which allow investments in stocks and other paper-based assets, a Gold IRA permits you to invest in physical gold. It's an effective way to preserve wealth and provide stability for your financial future, particularly in uncertain economic times. Levon Galstian, a CPA and accounting consultant at Oakview Law Group, affirms the benefits of Gold IRAs. He states that they diversify your investment portfolio and potentially safeguard against inflation by enabling you to hold a tangible asset. Moreover, Gold IRAs serve as a protective shield against market volatility and a vehicle for generating income in retirement. Opening a Gold IRA account is fairly straightforward. You will need a reliable custodian to assist you in setting up the account and handling your investments in accordance with IRS regulations. Once this is done, you're all set to add specific IRS-approved precious metals to your portfolio. These precious metals must meet purity criteria set by the IRS. For gold, the purity must be 99.5%, while silver must be 99.9% pure. Platinum and palladium, on the other hand, must both have a purity of 99.95%. The basics of IRA taxation. As you navigate the world of IRAs, it's essential to understand the two main types of precious metals IRA accounts and their unique tax rules. Both traditional and Roth IRAs have their specific tax policies, which may greatly influence your investment decisions. Let's begin with the traditional IRA. Contributions to this type of account are often tax deductible, which means they can lower your taxable income in the year they're made. However, when it's time for retirement distributions, these are taxed like ordinary income. If you withdraw from a traditional IRA before age 59 and a half, you're likely to face a 10% penalty unless you qualify for an exception. See the link in the upper right to watch our series on Gold IRA withdrawal rules. Once you hit a certain age, currently 73 in 2025, you're required to make minimum distributions. On the other hand, a Roth IRA operates differently. Contributions to a Roth IRA are made with after-tax dollars, so you won't get immediate tax benefits. However, the advantage comes later when you make distributions. These are generally tax-free. Furthermore, with a Roth IRA, gains distributed before age 59 and a half may be subject to a 10% penalty and income taxes, unless an exception applies. Unlike a traditional IRA, there are no required minimum distributions for Roth IRA holders. I just want to take a moment to thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Now back to the video. Tax benefits of a Gold IRA. As you consider the tax benefits of a Gold IRA, three main points come to the forefront. Firstly, capital gains treatment can give you significant tax advantages. Secondly, the promise of tax-deferred growth can provide long-term wealth accumulation. Capital gains treatment. You'll appreciate that one significant benefit of a Gold IRA is the treatment of capital gains, which can lead to substantial tax savings. The IRS classifies gold as a collectible, typically subjecting it to a hefty 28% capital gains tax rate upon sale. But in a Gold IRA, you're taxed differently. If your gold is held in a traditional IRA, your profits are taxed as ordinary income at your marginal tax rate upon withdrawal, which could be lower than 28%, depending on your tax bracket. This differential can result in substantial savings on your gold investments. Hence, storing your gold in an IRA can potentially reduce your tax burden, amplifying the appeal of Gold IRAs as a long-term investment vehicle for retirement planning. Tax-deferred growth. In your journey of building wealth with a Gold IRA, you'll enjoy the advantage of tax-deferred growth. This means the value of your gold or other precious metal investments can increase without incurring annual income or capital gains taxes as long as they remain in the IRA. This tax-deferred feature enhances your investment growth, as you're not losing part of your returns to taxes each year. Over time, this allows your wealth to compound more effectively. When you decide to withdraw from the IRA upon retirement, these distributions are generally taxed at your ordinary income tax rate. Depending on your financial situation at retirement, these taxes could be lower, further augmenting the benefits of a Gold IRA. Possible inheritance benefits. When considering a Gold IRA, it's important to understand the potential inheritance benefits. For instance, inheriting a Gold IRA can provide significant tax advantages depending on your relation to the deceased. Let's critically examine the tax implications for both eligible designated beneficiaries and designated beneficiaries. Eligible designated beneficiary. As an eligible designated beneficiary, you're in a unique position to gain potential inheritance benefits from a Gold IRA. This status allows you to transfer assets into an inherited IRA in your name, with the flexibility to choose specific distribution schedules. Designated beneficiary. For those classified as a designated beneficiary, you'll find that there are significant tax benefits associated with inheriting a Gold IRA. You have until December 31st, following the original account owner's death, to withdraw the account fully. The tax benefits can significantly reduce the financial burden on your inheritance. There's potential for continued growth of the investment. The assets can be used to secure your financial future. Tax pitfalls to avoid. While Gold IRAs can offer considerable tax advantages, they're not without potential pitfalls. You need to steer clear of prohibited transactions and understand the implications of physically possessing the gold. Failing to comply with rules can lead to severe penalties. So let's discuss these issues further to help you navigate these potential hazards. Prohibited transactions. You need to be aware of prohibited transactions to avoid potential tax pitfalls with your Gold IRA. These include any transactions that directly benefit you or any disqualified persons, like family members or businesses you own. Such actions, known as self-dealing, are against IRS regulations. Here are key points to remember. Never use the gold in your IRA for personal gain before distribution age. Always store your IRA gold in a qualified depository. Avoid buying gold coins from your IRA for personal use. Be aware that penalties for these violations could reach up to 100% of the transaction value. Stay informed and diligent to protect your retirement savings. The implications of taking physical possession of the gold. Taking physical possession of the gold in your IRA has significant tax implications that you should carefully consider. This action is viewed as distribution, meaning you'll be required to pay income taxes on the gold's value at your current tax rate. Therefore, requesting its physical possession may not be the most tax-efficient strategy. To avoid these tax pitfalls, it's crucial to understand the specific Gold IRA tax rules. Consult with a tax professional and consider keeping your gold within the IRA until you reach the appropriate age for withdrawal. Penalties for non-compliance. Despite the many benefits of a Gold IRA, it's crucial to understand the potential tax pitfalls and penalties if you don't comply with the rules. Non-compliance can lead to severe financial consequences. Here is a quick review of the penalties to watch out for. If you withdraw funds before age 59 1/2, you'll be subject to a 10% early withdrawal tax penalty. Failing to take your required minimum distributions RMD, starting at age 73, can lead to a 50% tax penalty on the amount you did not withdraw. Taking physical possession of the gold in your IRA can lead to distribution taxes and penalties. If your Gold IRA isn't set up correctly, it could be viewed as a distribution, leading to taxes and penalties. It goes without saying, when embarking on the path of Gold IRA investing, working with a trusted Gold IRA company that has a thorough understanding of the IRA tax rules is crucial to safely investing. As you well know, Gold IRAs are a tax-advantaged way of buying and owning gold without the stress of dealing with local or online vendors or the need for security and storage in your own home. These companies can provide access to competitive prices, price transparency, a reasonable buyback policy, reliable customer service, and security of your precious metals. However, finding the right Gold IRA company for your individual needs is critical. For example, If you require a low investment minimum to start a Gold IRA, Birch Gold Group or American Hartford Gold would be two choices to consider. However, if you are a serious high net worth investor who can afford a higher minimum to take advantage of the most competitive gold prices, as well as lifetime customer support, then Augusta Precious Metals would be a good fit. Furthermore, Noble Gold Investments provides Gold IRA as well as private investment options for home storage. See the links in the video description to find the right Gold IRA company that best serves your needs. To conclude, understanding Gold IRA tax rules is crucial in planning your retirement. These accounts offer potential tax benefits, but also come with pitfalls to avoid. Approved custodians, asset holding and funding restrictions, and rollover rules play key roles in your investment strategy. Whether it's a traditional or Roth Gold IRA, understanding the specifics can help you navigate this complex landscape. Armed with this knowledge, you're now better equipped to make informed decisions about your financial future. If you have a minimum of $100K in savings to protect and want to take advantage of the most competitive gold prices, see the link in the video description to attend a free gold investment webinar hosted by Augusta Precious Metals. Reserve your place today. Thank you for watching.